Peter Eliades with you. This is Monday, April 13th of the year 2020. And hopefully won't be too long an update today. There are a few things we need to go over, though. Let's do a quick review. Basically, all the closing price projections to the upside have been met on a minimal basis. When that happens, it doesn't mean prices cannot go higher. It just means that you're facing a potential turning point area. So all the upside projections outstanding have been met on a minimal basis. On a closing basis, I should say also. This is the New York Composite Index. It's one of the most reliable and consistent projection generators, and I want to show you something a little subtle about how these projections work. And it really is a subtle point here, but I'm going to zoom in and show you what I'm talking about. So this is the March 23rd low, right down here at the low in the New York Composite Index, came above, broke above both offset lines, and gave this upside projection, 11,479 and change, 11,830 and change, okay? But then we had a pullback, and in this case, the pullback came really, really close to these offset lines again. Now, when that happens a lot of times, what the market is telling you via these cycle projections is that projection we gave you may be a little bit too high. We're going to go back below one or two of those offset lines and give a slightly different projection. Well, in this case, that happened, although it's almost difficult to tell unless you zoom in. And we're going to do that now for you. Let's zoom in like this. See what happened right here? You actually move below the first offset line and immediately right back above it again. But in so doing, and again, this is a subtlety, in so doing, you can call this a projection right here because it did get below the offset line and then moved above it again. If we used this offset line or this crossing back above of the projection, what kind of projection would it give us? Well, here's my old technique of doing price projections, and I'll show you how I do it. I simply take, I think TradeStation calls it Fibonacci tool, but I put it exactly on this low back here on March 23rd, and then I move up to where the crossing took place, which would be right in here, okay? So we cross below just by a tiny bit, cross right back above again right here. That would give you a projection. If this is the 50% mark, you go back to the low, you measure the distance between that and 50%, and it takes you to this red line right here, in which case the projection was met. Right here, last Thursday. Market was closed on Friday. So you can make that case, and if that's the situation, then virtually all upside projections have been met. The one outstanding one, let's see the New York Composite Index. So this next longer one, okay, this one has been met, as you can see. There's the little green rectangle we've met right here. So the argument would have been that the most reliable projection generator, the New York Composite Index, had not met its projection. And yet, if we take a real close look, as we just did, at these offsets and how they came about, this crossing took place down here, would have given you a projection to the red horizontal line right here. So it's arguable right now that all upside projections have been met. If that's the case, then we have to look at the next longer offsets, and those are 24.2 to 27.6 offsets, and I pointed them out to you over the past week or two and said we could get up into this area and not get higher projections, and if that's the case, then those are potential turning points to the downside. This is the Dow Jones Industrial Average. Look at the space it has in here. It has another couple of days before it even reaches the first offset, unless there's a spectacular rally coming up here. But we go into all the way into 1, 2, 3, 4, 5, 6 more days, let's say, a week from now plus a day. If we stay in this territory, still no upside projections given. That's the story with the Dow. That's the story with the New York Composite. And that's the story with the S&P. But let me show you the NDX. Okay, as part of our analysis, we have to look at all the market indexes. Not necessarily all of them, but we have to look at a spectrum of them. This is the over-the-counter market. We cannot ignore that, especially because today, with a pretty good down day, the Dow down over 300 points, the Nasdaq Composite, the NDX, the Nasdaq 100, look what it did today. It went to a new high close since the bottom. Not only that, but for us, more importantly, it broke above the first offset line in this 24.2 to 27.6 offset. And when it did that, it tentatively gave a preliminary projection back to the old highs. 97.25, the all-time high is 97.36. Do you think we're getting back there? Let's not ask that question, because projections don't care what I think or what you think. Personally, I don't think we're getting back there, and that would imply that this is very important territory. So if the Nasdaq, which is already above the first offset line, 1, 2, 3, 4, if it stays up here for 4 to 5 days over the next week, it's going to confirm significantly higher projections. I don't think that's going to happen, but as I said, the projections don't care what I think. We follow them in real time, and they tell us what to look for. So this is an area of concern if you're bearish. You've got to keep an eye on this potential crossing here. If it's not going to cross, you can see where it has to come down really hard over the next week or so in order to avoid crossing here. We mentioned the possibility, another possibility, is a sharp decline here coming down into this area and then getting another cross to the upside around this level that would take us back to these highs that we've just seen recently. Okay, so that's it for the projections. I hope you know where we stand. Let me take a quick look at the technical things I mentioned yesterday. This is the S&P chart. Now remember, the original channel was the black one, and the black channel we rallied back up to and got above the lower channel, broke inside it with a potentially bullish configuration. But what I did is I showed you this green channel, which is admittedly unorthodox, taking these lows, taking the same slope, parallel it down to the Christmas low of 18, and we got almost exactly up to that with this rally that we saw on Thursday of last week, okay? And now we've had a pretty good down day today. Now, don't be surprised. In fact, you can see the futures now as we're talking. S&P futures are up 26 points. This is 7:19 p.m. Pacific time, so that's 10:19 Eastern time in the evening, Monday night, and that's what's going on. So I wouldn't be surprised to see another foray up into this area here. I would say if we get above this green line decisively, especially in light of the NDX 100 projections that we're looking at, there's something going on a little different here than most of us might imagine in terms of the bullish side. Don't think that's going to happen, but again, who cares what I think? We're looking at the projections. The only other quick thing I want to show you is the advanced decline line. Same thing happened there. The original channel, the black one, back to the Christmas low, we broke back inside that channel. Today came back to it, but look at the red channel, which is determined by these lows. Pretty good, 1, 2, 3, 4, 5, almost 5 bottoms coming down to it. So it's a good trend line. You parallel that to the Christmas of 18 low. We broke below it, and now this one we rallied right back up to. Another move back up again? Sure, we can see that. But if you start moving above this red line, again, especially in light of what the NDX is doing, there's something more bullish going on here. Don't think that's going to happen, but The market's going to tell us. Thanks for watching. Haven't subscribed yet? Do so, bottom right. Once you subscribe, click on the notification bell. You'll be notified of all updates. Thanks for watching.